Alrighty, we're back as promised. This entire month is dedicated to taxes. We're trying to put out at least 2 podcasts a week, bring you some pretty good content, get you prepared for the tax season. So what we decided to do today is to break down the 1040 form. Reason why we want to do this is when you receive that form at the taxes, you know exactly what it is that you're looking at, why this is there and where that number came from and how it came to this. You owing or you receiving. So yeah.
Pray that we all receive it. I pray that we're all receiving.
Yes.
Man.
Yeah, because it is good to receive. You done gave all year long.
It's more blessing to give than to receive. But in this instance.
Yes. You want to receive what you've been given. Because you've been helping out your state, you've been helping out the government, and it's time to get the big payback. So let's go ahead and get into this. Again, we talked about in the last episode was the W-4. So that pretty much puts you in place on what your standard deduction would be, and it'll determines what your filing status will be as a 1040 if you're staying consistent with your W-4. We did bring up that you're filing, you're putting down on your W-4 that you're single, and then when it comes time and you are married, you have different options of married filing separately or jointly, and how that affects the bucket that you've been storing all year long.
There we go.
So yeah, let's that's the first thing right there. The filing status. I mean, ain't no more to say. Besides the qualifying widower, so we have that also as an option. We're not going to get into it.
Yeah, but I do want to use this as a caveat, just to say for those newlyweds, you would still file single that first year. If you got married, okay, so let's say that you were married for half of the year, you still file single. If you're married,
especially if you weren't living together,
mm-hmm.
like more than 6 months, then you for sure want to do that.
Yes, so just remember that. If you're married within the year that you're filing your taxes, still file single. Mm-hmm. The next year, the following year, you will file jointly.
Yeah. That is an option. It is an option I will not take. I will be filing single for all of my days. I'm not going to commingle in that fashion because there are things that I do not want to come up to affect the partner. So
sound like that's an underground session that we used to have for all those who are like, what's he talking about? Maybe you need to hear that information. You can put that in the way, out
exactly.
in the way.
And I will only do it if you ask. So go and email us, info@wilsonfinancialmgmt.com if you want to know why I will always file single. And you'll know by joining the Dove Club on Patreon. Lowest $5 a month. So head on over to that. Or you can just do our website. It'll take you straight to the Patreon as well. WilsonFinancialMGMT.com. You know, logo back here in the rear. We're trying to do what we can. So, furthermore, everything else is just simple information on the 1040 form.
Please don't lie about it.
Of course, yeah. I mean, why would you lie about your name?
Hey.
Your last name.
Hey.
You gotta know your social security number.
Please, come on. Do have those documents. Do have those documents ready. If you already know you're a tax preparer, of course you just have that type of relationship. But always have your social security cards, your IDs of you and your dependents, your kids, or your nephew or your grandchild that you're taking care of. Have those documents ready, please.
Yeah. Don't necessarily have to have the state IDs, the student IDs, but most importantly, those social security numbers gotta be on hand. We want to make sure that stuff is accurate especially if you're switching from you used to be an H&R Block, now you're doing Jackson Hewitt, or you're hitting up my brother right here for him to do your taxes, as low as $100 for those singles out there, those singles out there. Yes, indeed. You want to make sure you have those documents on file, because you want to not commingle, transpose, none of that stuff. We want to make sure the stuff is accurate. We want to be efficient and effective the first time around. We don't want to amend nothing. We don't amend taxes over here. We get it done. We get it done the right way.
Yes.
So the first time we do it right. But other than that, there isn't much to check on there. You have to stand deduction if you're claiming someone as a dependent, your spouse as a dependent. That is possible given certain circumstances. You have, medical conditions and things of that nature where you're providing for completely rather than working together and providing jointly.
Or they were out of work that year. Mm-hmm. That is a way to take advantage of being married. You can, per se, file single because your spouse didn't work and get extra benefits. Mm-hmm. Extra benefits. I'll emphasize that because
yes. We're not talking about the show extra. We're just talking about getting more benefits.
More money.
There you go. But yeah, then it pretty much determines why you're claiming someone as a dependent, whether it be your spouse, it's because they're blind, they're born before 1955. Things of that nature you'll be able to see on your 1040 form after taxes. Then we're going to head and list all the children we got. We did what the Lord told us to do and go out and multiply.
Wow.
So this is where we put them.
Wow.
And we establish their relationship to you. So it may not be your son, your daughter, maybe your godchild, niece or nephew, because of unforeseen happenings as far as their life and their parents and things of that nature, that you're now responsible for giving them a good solid foundation, being there for them, providing, protecting, teaching. So all good things.
Man, thank you for doing that. Thank you.
Yes. And number one,
just like on the W-2, it is your wages, salaries, there's tips, things of that nature in that box, all of the money that you've made.
Mm-hmm. So it's a simple carryover. So that form now gets put on the master form. So we just
exactly
need
what it is.
Whatever that number is, we're just going to carry it over to the appropriate line on the 1040 form. Next thing you got is the tax exempt interest. We did go ahead and make sure we quote this accurately. So Investopedia, it's pretty much taxes and interest. It's interest that's not subject to federal income tax. So what are types of organizations that are not subject to federal income tax?
Any nonprofits,
there you go.
churches, our schools.
Yeah. So you are, technically required to report on your return, but it is not included in your taxable income. So that is something that is excluded because there is no federal tax on there.
Benefits. That's what it is. It's a benefit.
Yes, it is. So we're going to go ahead to the next line, which is qualified dividends. Again, reading from Investopedia, qualified dividend is a dividend that falls under the capital gains tax that are lower than the income tax rates on unqualified ordinary dividends. So pretty much they're talking about stocks.
Yeah.
Pretty much is what it is. Stocks, any type of investment portfolio that you have that has gained any interest on there, they're going to tax you on it. So you got the federal income tax rates are simply between 10 and 37%, but the qualified dividends, they're going to tax you on what you've gained, and that rate is 20, 15, or 0, depending on your income tax bracket. So yeah, good information right there for those who are loving to invest
or thinking about investing.
it's good information that you're able to go ahead and use, because that is another way to bolster your income for tomorrow. Yeah.
Good word.
Yeah. So you wanna ensure that you're appropriately putting that information on your 1040 form, and using the forms that they send you, 1099-Rs and things of that nature, and provide them to your tax preparer, because you are required. It is your responsibility and duty. If you received it, you ought to report it.
Most
Yeah.
definitely.
And we have Ira Distributions. That is when you've been contributing all the time that you were in the workforce. You felt that it was time to exit the workforce, explore the world, and I want to draw some of that money back. Depending on what type of portfolio, what type of investment account, IRA, 401k, Roth IRA, SEP, 403bs, all of those that are in the family of IRAs. And or 401k when you're distributing it back. That includes pensions and annuities as well on line C. Depending on what they are, you are getting taxed on that.
Most definitely. So basically, everything from your W-2 will be reflected in this first box. I was trying to see if it had like a part 1 or part 2, but it doesn't. So in this first area here is basically all the information from your W-2 is being plugged into this document.
Which is great, because they've simplified it a little bit thanks to they changed the tax code and the forms as well. We used to have like 79 lines that we had to fill out, go through, attach the appropriate forms. It was easier when you do it on a computer, but for some of the people I was helping with at that time, I had to do it by paper. So I had to literally do the math step by step. So yes, it is a whole lot easier, simplified. Literally, it is just 2 pages. 2 pages. Simple. Straight to the point. I mean, it's how it is. Then you have Social Security benefits. This is for those, I would say, that are still working, but drawing a portion of their Social Security. So if you're working like part-time or something, and from that, you've already earned over your 40 credits of working, so that way you're able to draw this money out. You will put that on there for many of those who are just living off of Social Security. They don't even have to worry about this because their income doesn't reach to where they have to file.
So in other words, it's, for our older, young generation out there, if you, I want to say 60 and up, we're talking, that was for you right there, for sure. Yeah.
Yes, indeed. We got capital gains or loss. You attach that Schedule D that pretty much dictates how much money that you put out there, and depending on how the market was flowing, you could have lost it all. You put 20K out there, and now you lost everything. So that's pretty much simple plus and minus.
Yeah, be honest about that, because if you're a business owner and you lost a lot, or you invested and you lost a lot, there's some good credits, and the percentage of that you can gain back. Those small business owner credits do come in hand, and I try to stress that to a lot of my clients. It's like, be honest about how much you lost, because you'll get more back, because America wants to see more small business owners succeed and get past that first 3-year mark. Because it's always hard to get through those first 3 years.
Yeah, because you're simply just trying to, establish yourself.
Most definitely.
Here at Wilson Financial, that's what we're trying to do. Be as open, transparent. I've even showed my own personal financial stuff before on Facebook, just so people can see that the method and methodology that we bring to the table is effective, and just to be educational, as well. So we're open books over here, open books, because we want to be truthful and honest and teach, because I think this is one thing that should be mandatory in high schools, mandatory in colleges
Trying to tell you.
is a financial literacy course that pretty much teaches you, if anything, the foundations. Because a lot of people don't even know. There's people 3 times my age had no clue. So it's just, this is good information. We just want to share it, try to uplift the generation's knowledge.
For sure, man.
So that way they can use it for themselves and to pass it on. But we're here to teach and for very, very minimal fees, here to earn a little money too, because this is our passion. This is what we want to do. I know for me personally, this is my gift, and it'll be wrong of me to keep it all to myself. You know, there's a lot of people out here that can use this information. So we're just gonna move further on down the line. Of course, there are other streams of income in here that you would attach as well. We'll discuss that later on in a different podcast. We already talked about the standard deduction, and that's pretty much the first minus right there on your 1040 form. So whether that be what we discussed, the 18,350, the 24,4,000, or the 12,200, I believe it was, depending if you're filing single, head of household, and then married filing jointly and or separately. But I will say this, if you're single, you do not claim head of household. You cannot sit here and be like, I'm the head of this house, head of household. No, you only qualify for that if you have a dependent and a qualifying dependent. You can't be over here, I mean, people do it in the world, but you can't be claiming sister so-and-so kid now. Because on the happen chance you get audited, hey, where the kid at? I don't see no toys in here.
Or you can't claim like a homeboy or something like that.
Oh, no, it can't.
Crashing.
Yeah, you can't claim that couch surfer.
No.
You can't do it. Hey, I ain't ashamed. I was surfing them couches.
It's an app too,
which is
the reason why I laughed. That's actually
so no, you can't. No, qualifying dependent, y'all. Once they reach a certain age, you can't claim them no more. But you can still claim them. It all depends on the income too. So there are situations where you're 16-year-old, you cannot claim them on your taxes because they're making their own money above the qualifying.
Now the thing is, especially all the single fathers out there, you know, if you're taking somebody out, you know, and trying to get to that married filing jointly status, go ahead and write that off as a charitable contribution, you know. Go ahead, you can splurge on it and get that money back too. Just call it a charitable contribution. That is a plug.
Oh yeah, of course. As long as they get that EIN number, just in case the happenstance.
No.
That you was lucky enough to get introduced to the IRS agent. Watch what you do. Watch what you do. Then you got the qualified business income deductions on line item 10. That also is a deduction from your taxable income for those who are owners, sole props, LLC, corporations, however you establish your business and you are owner of that business. That's where you would deduct your expenses, whether it be for payroll, cost of goods sold, marketing, the vehicle, the gas, the insurance for the vehicle, you know, security system, everything for the cost of running a business is deductible. So make sure you get that DBA if you just don't want to do it the simple, quick way. Establish that LLC to protect yourself and your assets from the business and account of being sued and things of that nature. Or if you're going to do a corporation because you want to write off your expenses as far as donations, you're able to do that through your business as well. So you can double dip in the sense your personal side gave and so did your business when you're the right type of corporation. Again, we're not going to give you all the tea because you got to sign up on the Dove Club,
Exactly.
on Patreon, so we can give you all the extra meticulous things that you're able to do. So yeah, head over to Patreon, low as $5 a month. If you want to give and support even more, we give you even more benefits. So go ahead and check it out. Please do, much appreciated. The more resources we have, the more informative information, sound effects, graphics, all of those wonderful things that we want to bring to the table, and an actual dedicated app as well. When you become a client of Wilson Financial, we're putting together an app that'll be able to pretty much mirror the things that we're doing. You communicate with us, you see your budget, you see your goals that you're trying to achieve. When we are actually paying the bills for you, it is going to be extremely informative and awesome. So yes, the more we can have come on, be Patreons, the more information we can get to you, because that's really what it's all about. Information is knowledge, and the knowledge is key to inevitable success. So that's what we're all trying to do. So once you bring all your positives and your little bit of negatives, you get down to 11B, and that is your taxable income. So this is what the government is going to be like, okay, we done gave you some things, we done took some things off. Now we want to get some of our money. All that money you've been putting out there, we're trying to keep some of it. So we're going to tax you. We're going to tax you on that leftover money and see what we can get up out you. So
before we give you the crumbs, now I'm playing.
No.
Before we give you your refund.
Yeah, because that's the key, you know. It's I always say the Lord gave us two hands, one to give and the other to receive. Now we didn't give, and we didn't gave. We didn't tithe to the Lord. We didn't ensure that this household's taken care of, and I'm able to get the job, I'm able to go see the doctor, and I want my money back. Okay, I just need some of it back. You know, I need my yearly bonus. You're trying to take my money, so they're gonna, based on that, your income, that the taxable income that's there, they put you in a bracket based on, again, your income, how you file, single, whatever the case may be. That's where your taxable income, your tax rate, the amount that you owe comes from. And then again, from there, they start giving a little bit of additives there, like the child tax credit. Now, before, you only got a K, as in 1,000. Now, we're going into the second year, I believe, in which you're getting 2,000 per child. Now, this is not the area where you go buck wild and you got 10 kids now. That's 20K.
Just to get the child tax care credit.
Yeah, no. Just go, again, that goes off your
love. I ain't trying to get in your household.
Yeah, it goes off your dependents. That's listed there. There used to be personal exemptions, which was $1040 per, on top of the child tax credit, but now that that's gone, second year gone, it is just $2,000 per child. They're following the lines of where it says exemptions, where you list your dependents on the top of that 1040 form, and then just do a simple multiplication from there. And that will be pretty much covering and should cover what they're taking from you. So if you got line 12A and you got a 3,500 there, but you got 2 kids, that's 500 right there, 500 plus.
That's in your pocket.
It's in your pocket.
That's the start of your refund right there. If you have kids and it exceeds the taxable amount. Yeah. If it exceeds it.
Yes. And then we just, they go ahead and add on there the self-employment tax. So now that's, we took some money back. Now we're trying to get some more now. You got that 500, we're trying to take that 500. So that's what lines 14 through 17 are for. Is trying to get some of that tax money back to the government, but then they throw it back at you, trying to help you out again, by those who qualify for the earned income tax credit. Right. Well, the earned income credit, excuse me. And that is based again on your income. And if you have a qualifying child, single folk, I'm sorry. I'm not saying go have baby real quick. I'm just saying I'm sorry. It doesn't qualify for you yet. When the Lord blesses you with child, you will be able to enjoy this little benefit. But yeah,
blessings, right?
yeah,
Yes.
blessings on blessings on blessings. But yeah, that's what, and that's based on the amount of income and the kids that you have.
Yes.
That'll determine your income, your earned income credit. So it's pretty cool. I enjoy it. You know, got 2 kids, 8-year-old and a 3-year-old. So I'm seasoned in the game when it comes to these child tax credits and earned income credit, because the income isn't high enough to where I don't qualify for the earned income credit. So I still get that double. That, you know, I get the child tax credit, of course. You know, I got a kid. You know, they're young.
Okay.
And then the income hasn't reached where I wanted to be, but yet because it ain't where I wanted to be, I qualify.
He gets that credit.
I get that credit, that earned income credit. But trust and believe, like food stamps, I want it gone. I want the big bucks because I know how to make this money flow. But yeah. So also you get the what is it called? The next one, American. I think it's American.
Oh,
yeah, American.
For all of the students out there, American Opportunity Credit that is attached to the university that you attend. So that's specifically, I don't know, but the explanation that I give is all the money that you paid into your school.
Yes, so that'd be books and supplies. If you pay directly to your university, because it's not in totally grants, Pell Grant scholarships,
Scholarship
they will
money.
issue you out a 1098
T.
Not E. E is you paying, and you're trying to write off the interest on the loans you was paying back. But the T
completely different
is when you're still in school and you've given some money or received scholarship, and if you qualify, because you only last for like, how many years you able to earn that? I mean, use that credit?
Out 3 years.
There you go.
3 years, unless you go into a master's program, you'll that's when it starts over. That clock starts over again. But 3 years. Now the cool thing about this is you do get a majority of it back. Like for most of the college kids that I've done in the past,
it's about 1,000.
Yeah, it can be a cool 1,000 or a cool 1,500. Now the thing is, if you, let's say you didn't work that much during the year, okay, if you didn't earn over $10,000, there's no real reason for you to file. Now, if you made $10,000, you're in school, and you paid into that, you better file, because you getting all that money. All of that 1,500 or 2,000, that's coming right back to you, guaranteed.
Good stuff. And then we get on over to the pretty much the refund section at this point, because you did your pluses and your minuses. You know, the IRS is trying to get all their money back, but couldn't because you qualified for this and you qualified for that. You know, I got you a moment. You done got the man now, and so now
Making it a competition over here.
I gotta beat them every year. Gotta beat them. So that way you can go ahead and get that refund amount, and that's pretty much it. You if you're with someone, you make sure you give them the right routing and account number. You don't want to bless nobody but yourself on this side.
Now this is a big thing. I can honestly say I've never messed up on this because I don't want someone to mess up on this. But I dealt with I dealt with someone, and they gave the wrong routing number, or they gave the wrong account number, and I will tell you that will legitly add 2 weeks to a month.
Mm-hmm.
To it'll delay you 2 weeks or a month to actually get that money back now by messing up on your account or routing number.
Yeah.
Because that right there is you really put down someone else's,
Yeah.
account number. So it's like you really have to go to your bank and let them know that, okay, I messed up, so don't mess up, please don't mess up.
Yeah, make sure you provide the most accurate information, and in the review screen, make sure that the information is accurate. Especially if you're like me, got the earned income credit, got the child's tax credit, it's already being delayed because you gotta wait till after Valentine's Day.
Yes, it's
Now
always going to be after Valentine's.
Now you done pushed it after the tax season, well after the 15th, 17th.
Probably to
wait.
Easter.
Yeah.
And I'm being honest, probably to Easter.
I've seen some people because they made that mistake or they forgot a tax document when they initially filed, didn't get their money till September.
Boy.
Yeah. So let's make sure we get this right, because again, that was more. I would say it was more so because it was new. The new tax code was new, first time filing. Then they gave the extension. Then there was somewhat of a little crash also with that system, so that really extended things. And they gave an additional grace period to those who were, I guess you can say, procrastinating. You got additional time because, or you had to just file the extension up until you got till October 15th, I believe it is.
Yes.
Yeah, October 15th, which wasn't too long ago, because we're shooting this November 24th, so that wasn't too long ago you got that extension. So you may be, if you played your cards right, be getting a double bonus. You finna get it now before the end of the year, if you were able to get some money back.
Boy.
Or you can ensure that you maximize what you finna get, so that I can cover last year's taxes. So you want to make sure you provide the right information. Make sure you do the things on time, because filing an extension you do got to pay money for. That ain't free. So that's pretty much it. You determine you determine how much you get or how much you owe, and if you owe, then you can always do payment plans at that point. Pay in full if you big baller. You can go ahead and just drop that whatever it is and be done with them. But at that point, you have your tax preparer who go ahead and signs for you, and then you sign, which is why we say when you sign, you make sure the information is right for the account number.
Yeah,
for
because
those receiving refunds.
Those are H&R Block, Jackson Hewitt, anyone that's doing it through a computer. Say press, sign and print. That's it. After that, you gotta amend it.
Yep. And they're gonna charge you to amend it.
Got to.
So, again, over here, Wilson Financial, we don't do no amendments. The first time around, we get it done right.
The right way.
So you got all those people who are non-business individuals. It is just $100 to get that done. If you are a business, it's $250. So that's pretty low. We try to be competitive because we're here to help. Ain't trying to charge too much, and it don't even matter how many forms.
Exactly.
That's it.
That's one way they get you.
That's
you
how
got
they make
3 or
their
4
money.
forms. That's at least $300, literally.
And you think you're getting away. Like, oh, I got all this money. They took it out your refunding fees. They took it right up out there.
And I'm talking about married filing jointly. Y'all got 8 forms because y'all was, hustling out there.
Yeah,
Well,
got rental properties and stuff.
It's about $600, and I'm not lying.
Yeah,
I'm like, why?
They charge you for the forms.
Yes.
So don't matter how many forms, we're here to help. $250 for the business. That includes if you have rental properties, you are considered a business, not an individual. And then for those simply individuals working out there hard, trying to get it, hustle and bustle, just $100. We're here to help. Well, that pretty much concludes us breaking down that 1040 form for you guys. Any questions, any concerns, you just go ahead and send us that email, info@wilsonfinancialmgmt.com. That's info@wilsonfinancialmgmt.com. Anything else you want to go ahead and add, my brother?
Nah, man.
That good?
Yeah.
That's good. We out of here. Till the next one, we gonna have some fun.